Raiders. What's up?
Not much. How you doing?
Good. Happy to see you guys all.
Yeah, been a minute. About a year since I talked to the team last time, actually.
Yeah. Well, there you go. Um, what's the saying? Is if you wait long enough, then good things happen, right?
Yeah, 100%, 100%. Yeah, really super excited to have you guys on here. This is the first do some real life work stuff, and not being around for a while, haven't been able to do any interviews for a while. So you guys are my first one back in a while. Super excited to talk to you. So I really appreciate you guys joining.
Nice. And you were just taking a sabbatical while the Bitcoin was under 20,000, right?
Oh, I wish it was a sabbatical. No, I was actually I was gone in Europe for my in real life job, and so I was there for about 6 months, and had basically minimum time to kind of really focus on this. I was active in the Discord and stuff like that as much as I could be, but super hard to interview people with. I don't want to get too much into what my real job is, but yeah, I was pretty busy over there. So happy to be home and be back. So
Sweet.
yeah. So, but yeah, super excited to have you on here, man. I'm really excited to talk about this. With everything you guys have done and the launch coming up. So you want to go ahead and kind of kick it off with an intro?
Yeah, I don't know where to start.
Yeah,
so let me just
yourself.
I mean, there's not much.
Or LandX.
Look, I mean, I'm sort of a boring guy, so I used to be a TradFi sort of VC side for a while, and then I had a e-commerce business for a while, and then basically I'm a serial entrepreneur. I've got some real world interest in business as well. So, but some of my old investors or partners in business were farmland owners, and they were investing in some other businesses of mine. But I was always talking to them about farmland. I was actually fascinated how cool it is to own that asset which they were meticulously buying and looking after and harvesting and whatever. So like they're rich, like they're loaded. And I thought, what can be done with that asset class, on chain? And we're always talking to them about, and they're so far away from it, right? So they're the most sort of traditional people that you'd ever find, like no risk taking at all, absolutely nothing. And slowly over probably 4 years that I was talking to them about what can be done blockchain, and passing them my excitement about what can be done with real world use cases of blockchain, they slowly started to sort of come around. And then about 2 years ago, we had this plan when everything was booming in the monkey business on chain. We had this plan to build this platform where we could sell farmland as NFT tokens, and that flopped because the whole idea flopped on a MVP level, because we couldn't find anybody who wants to sell farmland. We couldn't find anybody who wants to pay hundreds of thousands of dollars for farmland. Now, they were happy to pay for monkeys the same money, but they're not happy to pay for farmland. So it's a bit crazy. And we thought, okay, well, like, we need to just understand where the market is and how do we kind of get the product market fit. And over a course of weeks, we kind of conceptualized this model that we have now, where we're solving the problem that these farmers have. Although they don't want to sell the land, they have a big problem. They don't have access to funding, access to finance, and they need finance for them to be able to keep up with, with competition, because the competitor would get, for example, uh, let's say, build an irrigation system or a drainage system, and he would have, higher yields. So that will make him attract, better buyers. Or he would build a silo, for example, and he'd be able to store his corn for 3-4 months there, and then the prices would go up after harvest. They're usually low, so the prices would go up, and he'd be able to offload it. So the market is pushing farmers to always improve. And the problem with their improvement is that they simply don't have access to finance, because banks don't like financing medium-sized farmers, let's say about like 1,000 hectares or like 500 hectares. That's for a bank, it's too much hassle. So they work with over maybe 10,000 hectares, big, large agro complexes. But like smaller farmers, even 5 hectares, 10 hectares, nothing at all. And those guys are making 85% of the calories that we consume as humans on this planet, that we cannot live for more than 3 years. Sorry, three days without. Like we gotta eat like a couple of days, a couple of times a day. So we can't really last for long without food. So that food must be produced all the time. And the farmers who don't have access to this finance are struggling because they need to buy inputs. They have always the pressure of bad weather, bad harvest, etc., etc. So they're not making a good living most of the time. Now, where we come in is we say, right, so you need capital and you grow corn. Do you know how much corn you grow? Yes. How much? 6 tons of corn a hectare. Great. Why don't you commit 10% of that harvest, let's say 600 kilograms of corn every year, and we'll give you a bag of money up front. How does that sound? They go, okay, how much money? We say, okay, well, let's find out. So then we go to the market and we say, what if we pay you a kilogram of corn every year in perpetuity? How much would you pay for it? So how much is a kilogram of corn or soy or rice or wheat every year for you? So you pay it once, right? So you buy it once, but you keep receiving it every year, from now on. And the market study we made came back to us saying that people would be happy to pay at the current rate anywhere between 6 and sort of 10%, um, basically APR on that kind of instrument. So if corn is, let's say, 20 cents a kilo, just rounding it up, and you're happy with, let's say, 10% a year, then you're happy to pay uh, $2 to get 20 cents. But the thing is that when you're getting 20 cents, your corn prices traditionally goes up against inflation over medium to long term. Of course, they fluctuate up and down a little bit, but overall against the US dollar, the commodity prices are appreciating because of the macroeconomic factors. So rising population, increasing demand, rising energy prices, global warming, war. So all these factors are kind of going into the price of the commodity. So the yield that you're receiving on your investment is kind of protected against inflation or hedged against inflation with all these macro factors. So investing in food is safe, right? But how can you invest in food? So you don't like you can buy futures, right? On the like in the futures exchange, buy corn futures, for example. But that's just exposure to the price. It doesn't give you that yield component that we want. So we've designed this instrument. It's called X token, and that X token vault basically buys you a kilogram of a commodity every year. So if you buy, let's say, X corn, you get a kilogram of corn every year. You buy X wheat, you get a kilogram of wheat every year. You buy X basket, which is like an index fund of these four X tokens, you get proportionally a kilogram of all these four into the basket every year. So with these instruments, we did the test net, we built it out, we had some fantastic response from a community. I think people really got the idea. And we obviously spoke to farmers. We sent up a bunch of upstream providers, so land providers for us, our farmers. We went to a couple of geographies. We settled on Latin America. So first land that's coming online now is from Colombia. But we'll be working um, with a bunch of different destinations in in Latin America. Starting from Argentina, Colombia, Chile, Dominica, Ecuador, Guatemala, Honduras, Nicaragua, Panama, Paraguay, Uruguay. So there's a lot of a lot of opportunities for LandX in Latin America. So we've got some farmers in Europe and Bulgaria, specifically Romania, as well, Estonia and Lithuania. So, but we're going to be probably diversifying. Probably 20% and 80% we're going to be, building up the capacity in Latin America because it's just amazing opportunity there. So, I mean, that's kind of the long story of it. So now we were building this thing for 2 years. We did 2 test nets. We built a community, and now we're launching. So we're launching on 15th of December. We raised a bunch of capital from our seed investors, from farmers, a while ago when we started. So we raised about $5.5 million US, and now we successfully closed our private round literally yesterday, close to $1 million raised, and now we're going through as we speak. We've launched today our public round for our LNDX governance token. So on LNDX.fi, LandX.fi. So it's open more or less for the Omega farmers first. This is our staple of our community, then Alpha farmers, and then the third stage is, first come, first serve. And then we're listing on the 14th of December our LNDX governance token, and we're going live on the 15th of December if everything, goes well. That's the plan.
All right. Awesome. Okay, well that's the AMA. You answered all the questions. So.
Okay.
No, I'm just kidding. No, absolutely. People are here to listen to you talk, not me. So I like to just let you kind of go. Very cool. Yeah, I mean, I love, obviously, real world assets is one of the huge narratives right now. And then what is a better, in my eyes, what's a better kind of real world asset per se to bring on than a commodity like food, something you can't live without, right? So, and then that's why I was so, when I first heard your interview with Nick Dracon a little over a year ago, that's why I got super fascinated with the project, because that's something that I was kind of wondering as I got into DeFi. Everyone was already talking about this. So I'm sitting there thinking like, okay, well, how do I bring a car on chain? Like how is that beneficial? And then you start to evolve into things like, okay, you could sign leases with NFTs and blah, 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 blah. But how do you actually bring an asset on chain? And the commodities, which what you guys are doing is an awesome way to, incentivize people to invest in it, give them an opportunity, but then also to incentivize farmers to move on chain as we try to kind of move an entire, as we try to move everything on chain over time. So it's super cool. I love what you guys are doing. So, but I do have some kind of questions, some like deeper questions.
Sure.
We'll get into a little bit of the tokenomics towards the end. You kind of covered some of that already, but really just kind of from like a 3 perspective approach here. There's some questions that I definitely have. So for you guys, right? So obviously, I know there's a bunch of different things that go into choosing land, whether that's legalities or like how much can they actually produce, et cetera, right? What crops are they producing? What is kind of your due diligence with the farmers themselves, the farmland, and how you're assessing, what's the best area to operate in, kind of thing?
Yeah. Okay. Well, it's a great question, because the fundamental part of this whole thing is the asset that lies underneath this structure, and it needs to match certain very specific criteria. Firstly, it has to have no legal encumbrances on ownership. So whoever owns that land cannot have mortgages, cannot have it being, somehow mortgaged or encumbered by any other liability that he has. So that's first. Second is that it needs to be in a rule of law country where legal instruments are enforced, such as mortgages, or in our case, it's a mortgage and a promissory note, which basically allows us to not go through the court in order to reclaim the asset if the obligations of a farmer are not met, but just literally go to the execution of that enforcement with a promissory note that is pre-signed by the farmer in advance of this financing arrangement. So I know it's a little bit detailed, but it's very important to understand there's a legal bridge, which is very solid between the protocol and the farmer itself, where protocol takes an obligation from farmer to receive that crop share, as we call it, which is regular payment of a fixed amount of harvest every year. And that promise is secured by the farmland itself. So if that promise is not kept, then the promissory note is enabled, and LandX will reclaim that land and find another farmer that will honor that obligation to pay crop share, because the farmer has received the funds up front. So that's the second criteria. Third criteria, of course, is that we're looking at what's called NDVI index, which is basically index of vegetation that you receive uh, from sat nav imagery, and you're looking at whether that land is actually looking like a productive land, or it looks like, you know, a swamp or a forest or anything like that. So in in case of Colombia, we have our people on the ground. So our seed investors operations are there. So they are farming that land as well. And the first lands that are coming online are actually being leased out to the operating entity of our one of our seed investors, who's going to farm that land and pay these crop share obligations. So there's also security, of course, understanding they're interested in the, you know, in the protocol itself and success of the protocol. But like long-term strategy, of course, is to diversify and um, to decentralize the process of decision making, whether the farmland is suitable for LandX or not, through a set of very fixed criteria that um, you know, somebody on chain like a Kleros court would be able to evaluate and make a judgment of whether that land is suitable to be onboarded onto LandX protocol. So that's one side of things. The second side of things is the proof of reserves. So Chainlink, as you know, it's an Oracle protocol, the biggest. They are launching a wonderful program for RWAs, which is called proof of reserves. And the way it works is that you get an auditor that works with Chainlink, who is a certified um, chartered accountant practicing, who will basically study the documents and the obligations that are being created on chain against these off chain um, assets, and make a determination whether the quantity of these on chain obligations matches the quantity and the nature of these off chain obligations. And that determination will be passed on as a number. So in our case, it's how many X tokens we're minting against the kilograms of obligations of a farmer. And it will be passed on through an Oracle on chain and visible on the Chainlink proof of reserves dashboard. And we use that to add another layer of proof of existence of underlying assets, and also the proof of existence and matching of the obligations and the outstanding, basically, obligations of the protocol, that they are covered by the current crop share agreements. That's the second thing. And the third thing, the farmers need to prepay their crop share in advance. So when we give them the finance, we deduct 12 months of crop share, and we store it in a smart contract against which the investors will then claim yield. And we also store another 12 months of prepayment in a multi-sig wallet, that in case they don't pay for 12 months and there's a legal process that lasts longer, we are able to realize these X tokens and compensate the yield for the investors, making sure that, I mean, this process 24 months is sufficient enough with the kind of legal structure that we have to, but that's just extra security on top. And then the fourth layer on top of that we're building is insurance protocol for crop share, for protocol that if there is a weather event that causes complete loss of harvest, then the funds derived from staking of that security deposit will be paid out to insurers, that as a premium, as insurance premium, so that if that event happens, for example, frost in in Casanare province in Colombia during harvest of rice. I mean, never happened, but let's say that happens, and so the parametric insurance will then re-enable the payment out to the protocol. So it's a multi-tier thing. I think that it's probably the best now structure that we can come up with ensuring that that yield is what we're protecting, that investors are always receiving that yield. That's the main thing. So, how that's going to work out in practice in terms of scalability of that, I hope well, but we're yet to kind of onboard our first lands. It's not without its own sort of bureaucratic things. So some things within registry, notary registrations of these lien agreements and mortgage agreements, they're taking some time. But once you go through this process and establish a footprint in the country, I think everything is basically quite scalable there.
Yeah, 100%. Completely agree. I mean, very thorough due diligence. I know that obviously with the amount of legal hurdles that you guys got to cross just to get into certain countries, and like you mentioned earlier, right? You were talking about Romania. Okay, so I actually just spent about 6 months in Romania, and with them, I know that they have, they're the number one exporter of rapeseed, right, for canola oil. But not a lot of other things, but they are looking for opportunities like this. They're about to switch to the euro. They want to expand their ability to market what they can produce. And I think this, they're the type of country I think that will really benefit from something like this once you guys are able to, lock everything down legally.
Yeah, I mean, we're looking at something that's called intellectual property rights index, and Romania went from about 5.5 to about 6.5 over the last few years. So they really did well. We rely on that index to sort of ascertain whether there is a macro favorable environment for a country to be able to be accepted. Later, this will be voted by the holders of the LandX governance token. How low or how high do we need to keep these countries in terms of protection of property rights? Because that's important. I mean, if you would have, for example, invested in Central African Republic and bought some land for $200 a hectare or less, who knows? Maybe 3 months down the track, somebody will come and repossess that land from you. So that's not what you want. So you want a significant protection of the legal structures of your property rights, and that's the kind of the first criteria that has to go. And Romania is absolutely perfect. So most of the EU countries are very good, but in some of them, like Holland, for example, where land is like 40,000 euro a hectare, there's really probably yet not much that LandX can offer them because it's a highly efficient market as well with overcapitalized lands. The prices are ridiculous there. So the farmers don't really looking for capital as much. Like the infrastructure has been built out already. So yeah, so places like Germany, Holland is probably not, but France, maybe Spain, yes. Who knows? Greece.
Yeah, absolutely. Yeah, a lot of opportunity over there. Okay, very cool. Yeah, thanks for the in-depth breakdown with kind of how you guys are handling everything with due diligence. I know the first time I talked to your intern, a lot of this was stuff you guys were still figuring out. So it's super cool that you guys are kind of getting your footing now in South America. I know that's always kind of originally kind of the plan. So it's very exciting to see you guys actually making these things happen with and coming to fruition. So, all right. So as we move on from kind of your due diligence for the protocol, right? So let's look at this kind of the aspect from the farmer. So the couple questions I have really first, how do you bridge that knowledge gap, right? How are you able to bring this to a farmer who lives in South America and be like, hey, here's crypto, you know what I mean? So how'd you guys approach that to be able to get people on board? Because obviously the financial aspect, which we'll talk about in a bit, is enticing compared to what they're used to, but it's a huge learning curve, right?
Yeah. So, I mean, the good thing is that when you talk about money, people listen, right? So when you're offering money, you will always have an ear listening. So they will try to understand. So that's the first thing. Obviously, it would be a big, massive leap of hope to assume that somebody from rural area of Colombia would be able to just jump on the MetaMask with the ledger and hoping to Gnosis multi-safe and execute a transaction using a transaction builder. So that's not going to happen. But so the long story here is that the first approach we took is we hired some people with gray hair who had some great connections with farmland, absolutely knew nothing about blockchain, and we sent them out to build relationships with the farmer cooperatives, with the community of the landowners, and nothing happened from it, right? So that just did not work. It flopped. So then we said, okay, we'll do another way. So we reached out to community and we said, okay, guys, so if you understand, so if you're like a DeFi native and you understand crypto and you live somewhere where you think that you might have interest in becoming what we used to call, and we still call, but it's about to change, a validator for LandX, it's changing to originator. So if you want to be an originator for LandX, there's a lucrative opportunity for you. And the way this opportunity works is basically it's the originator's job to then find the land and do that work that you're talking about. Now, the farmer may or may not have any knowledge about blockchain, so usually not, but it's the originator who then needs to work a structure, and we have a couple of legal instruments to do that, where through the power of attorney, originator can execute that transaction of borrowing on behalf of the farmer without losing the strength of this whole structure. So then the originator becomes basically like a sales um, agent for LandX protocol, and that's very scalable. So we can have as many agents as we want, and it's competitive as well. So like if there's one agent, they can charge a one-off fee. They have a percentage of the financing that they receive, so they can make some serious money doing that. And that opportunity was open, so we reached out to the community when we're looking for new locations. We're now looking for Latin America actively to expand in the regions. So we could have anywhere between 300 to maybe 1,000 originators at some point in time. And these guys are the ones that are doing most of the groundwork, working with the farmers, onboarding, explaining how that works, how the protocol works, etc. So basically, like an outsourced remote sales force that's incentivized by by the tokenomics of the protocol itself. I think this is the best model that we could come up with, and we will have an AMA session with one of our um, validator or originators. So he will explain how that works and why would like it be interesting for him to do. But it's quite a lucrative opportunity.
Yeah, makes sense. Absolutely. Yeah, that's when I was reading through the docs about the validators. That's kind of what I was thinking.
Yeah.
The opportunity to make money there, and obviously it's smart to have the people on the ground doing the assessments and helping with that coordination, because I can only imagine trying to do this on Discord. What a time that would be. But yeah, very thorough system. I know that's it's hard. We talk about just teaching an everyday person who's even heard of Bitcoin about things like DeFi, and then you try to go and cross a language barrier and just an economic system that a lot of people haven't seen before. It's just so many challenges that you guys are tackling. So it's just kind of really interesting to hear about your approach. Yeah, so very awesome. So and then also for the farmers, all right. So kind of talk about their specific profit that they earn in comparison to just the typical buying and selling of commodities, right? Price up, price go down. But here you're offering the yield. And so a question that was asked in our Discord before this started, that's a really good question I wanted to ask is, right, so you guys, where did you come up with the 9% kind of returns that farmers are going to be able to get? Yeah.
Right. So there's two components to the forecasted or expected, or I'd say targeted APR for the X tokens. And let's just dive into that a little bit, because I think it's quite important to sort of understand where and how these X tokens are born and what happens in their life cycle. So at the moment, there is literally 0 X tokens on the market. The first X tokens will appear on the market on the 15th of December, when about 1,000 hectares of land will be tokenized through the crop share agreement with the LandX Holdings, which is a company owned by LandX Foundation, of which the LandX token holders are the beneficiaries of. So that land will be then collateralized basically against this obligation of approximately 400, so 600 times 1,000, so roughly 500,000 kilograms of various commodities, right? So corn, rice, soy, and wheat, approximately. So I'm just giving approximate numbers. I may be wrong with my math now, but it's roughly 10% of the average harvest for a particular crop. So now, if you want to buy these X tokens, you would only buy them at a price at which they will be listed, and they will be listed at a price that will pay you about 9% yield every year. So we know that corn is like 20 cents. So if corn is now 20 cents, they'll be listed at $1.80. So then we set a target rate for the price of this X token at approximately the rate of inflation that we believe is accurate, which is now roughly 10% a year. So real inflation, although I know that you can go to some websites and they say inflation is 4%, but we think it's more like 10% in real terms because of the different methods of how this inflation has been calculated. But the real inflation and the true value of the US dollar is dropping at a rate of about 10% a year. So what we do is then we set a target price, so the target asset price of this X token by the end of the year. And if it's now $1.80, then in a year it has to be about $1.98, right? Now, how do we maintain that line? Well, firstly, nobody has the tokens now, so whoever buys the tokens has to buy the price that we sell it at. Otherwise, they don't buy it. So as the demand appears, we will then sell the tokens at a particular price. If you want to buy the tokens, so let's say you bought at like $1.80 now, and then you want to sell, like, for example, at $2. Well, no problem. You sell at $2. The liquidity pools are deep enough to absorb any selling pressure of X tokens that have been bought before without any price movement. What happens if we start onboarding millions of hectares of land? That's a different story, but we're not there yet. So at the moment, we're only onboarding the land when we know that there is demand for X tokens. So we will supply a controlled amount of X tokens so that it does not dampen or damage or jeopardize the price curve that is being very tightly managed for the X token throughout the year. Because we see the X token being a stable coin, or a flat coin if you want, that is appreciating at the rate approximately reflecting the inflation, that pays yield, which is equal to roughly 9% of the value of itself, because that's what the cost of capital is for the farmer. That's the cost of the capital that the farmer can pay without having a problem. So that sort of aggregate of about 18%, 18 to 19% a year is what we're targeting with the X basket and X token primitive. And the way it will pan out, I think, is that it will kind of, investors will see what happens with that price. Unless there is some really crazy malicious activity when somebody buys a whole bunch of it, I mean, and then drops it in the liquidity pool, we've got plenty of money to absorb that. So I don't think anybody would go with, $10 million to, drop the price of X token and lose money. No problem, because then the farmers will come in and buy out all these X tokens, close out their obligations, no problem, restart new obligations again. So the investor loses money who is doing silly things like that. So really, it's about controlling the selling pressure of the X token, and because nobody has any X tokens to sell other than the farmers that we on board, but we're controlling that process. Does that make sense?
Yeah, 100%. Yeah, that's a good answer.
Cool.
Yeah, absolutely, very in depth. Yeah, it makes a lot of sense. It got asked to me, and I was kind of wondering the same thing. So very, very thorough explanation. and definitely appealing for a farmer, right? To get that 9% on top of everything. Um, like you said, money talks, right? So
Yeah, I
it's
mean, like, what will happen is that so the farmer on chain, right? So we have two farmers, right? So real world farmer, he gets basically a bag of money up front for about 9% of his, right, like for 9% of the value of that bag of money, roughly, right? So the cost of capital for a farmer is the money that received as yield by the investor on chain, minus a small commission of like 0.25%. So the investor on chain gets yield, which is roughly 10% or 9% a year, and plus he gets that X token price appreciations through the TAPA, as we call it, right? So the target asset price appreciation model that we will maintain um, programmatically with trading bots and with whatever other mechanisms. But the idea is to have a backed flat coin. Well, I mean, it's not really a flat coin, but a backed digital primitive that has underlying asset that has the economic narrative that makes perfect sense. So land prices have always been outperforming inflation long term. So farmland is a very critical asset class. It's not replicable. There's only 2% of land of the um, of the planet's surface that can produce crops. It's not easily produced. It's being destroyed left, right, and center. So the soil is eroding. The harvests are not being growing for a number of years because of various um, problems with erosion of soil, with the control over the pesticides, et cetera, et cetera. So, like, there's a lot of macro factors that are making this asset class extremely interesting. And as an investment, it's no surprise that Bill Gates and the ballers, they're all out there buying farmland.
yep,
You know,
that's what I was about to say.
like
Yeah, all the
they
private
understand how to
entities and
hedge
rich
against the
people. Yeah.
falling dollar. Like this is your first thing. You got a bag of money, you go buy some farmland.
Hmm.
Everybody understands that's the best hedge against inflation. We'll always have demand because you can always grow stuff on it. So that's what we kind of abstracting away in that X token digital primitive that you can now buy, on chain, and that encompasses everything within itself. So I think it's pretty cool. We'll see how investors will react because one thing is that we're excited about it. The other thing is that we need to get that message across and get some buy-in and see how the TVL grows and what are the risk factors that investors are highlighting and address those and then build it out. So that's been our model.
Yeah, absolutely. Yeah, I completely agree. I mean, land is one of the best assets to buy. Like you said, I was the first. That's exactly what I was thinking the whole time you were talking. Was Bill Gates, single largest owner of farmland in the United States? Like
Yeah,
all the rich people, they're buying up all the land. It gets scarcer and scarcer for the little guy
yeah.
to buy. So, yeah, always be profitable. Um, okay, very cool. All right, so I guess we'll kind of transition here. You talked a little bit about the tokenomics, right? You talked about how the X token and then the basket of tokens, the C tokens. Kind of want to just kind of dive into a little bit of kind of the distribution of the tokens and how that's going to look, and then what are the details for you know all the seeders and seed sales and stuff like that. The information some people may not have about
Yeah.
how the
Sure.
tokens are.
Well, firstly, there's a whole bunch of tokens at LandX, right? So the first thing is to get your head around what kind of tokens there are. So there's three types of tokens. Uh, token, right? So that's the first one. Just give me one sec. Just
No
do
worries.
something like real quick.
You mentioned you were talking a little bit about the X token and C token earlier, and the which commodities they represent and all
Yeah.
that. So
So the LNDX is a governance token that basically provides the strongest exposure to success of the protocol itself, right? So it's a speculative, highly volatile, like any other, RWA token in the space, and that's what is now being offered to the public investors outside of the U.S. on the token sale event that happens now on our LandX.fi website. So it's no financial advice. So read all the information there, and if you like it, you can participate. That LNDX governance token absorbs or pays out about 60% of the fees generated by the platform itself. And platform charges the farmers for financing. It charges a percentage of the crop share paid by them. It charges a small tax on the yield collection. So there's a few revenue streams that platform has. So 60% of that revenue is paid out to the LNDX governance token holders. The token holders can vote on major protocol parameters such as maximum allowable crop share, distribution of fees, and things like that. So it's a fully kind of DAO type style token. So put that aside. Now we come into the X tokens. X token is basically a commodity vault that pays you yield in kilograms of commodity. So we spoke about that, and that's kind of like your right to receive a kilogram of a commodity every year. That's called X token. So there's another type of token called C token, a commodity token. And a commodity token is what that yield is paid in specifically. So you receive your yield in C tokens, and one C token equals to 1 kilogram of commodity, right? So if to make it a little bit simpler, you stake one X token, you receive one C token a year, right? So you stake one X corn, you receive one C corn a year. That equals to 1 kilogram of corn. And then you can sell that C corn at any time you want. You can keep it as C corn for a year, 5 years, or 20 years, or you can sell it the same time as you claim it as yield against the US dollars in a smart contract that have been deposited there by the farmer who prepays his crop share in advance. So there's always liquidity for C tokens, right? So there cannot be a situation that you received yield, but you cannot cash it out in USDC. That's impossible. So that money is locked up and nobody has any access to it. So yield is paid in C tokens. But there's a use case where you accumulate the C tokens, and then as you're expecting the commodity prices to go up, for example, your C token prices will go up because C tokens are priced based on the commodities. Again, through a Chainlink Oracle, we get a feed every day from Commodity Exchange, and that's how C token is priced. So you can come in with a C token and sell it for whatever kilogram of corn is worth today. And it can be worth, 20 cents now. It can be worth 30 cents, in a few months. Who knows? There's a market. So these all sort of tokens, C tokens, X tokens, form this X token ecosystem. And then there's X basket, which is a very cool token. It's an index fund of the 4X tokens: X soy, X corn, X rice, X wheat. And what X basket does, it contains within itself all 4 types of X tokens that are being staked in a smart contract automatically. Yield is being paid out into that smart contract in C tokens. C tokens are sold for US dollars, and US dollars are then used to buy more X tokens within itself. So you'd anticipate X basket to naturally kind of absorb the growth price or the growth trend of X tokens plus the yield itself as well. And that's a fantastic instrument because X basket itself is a fungible ERC20 token that can be taken out anywhere in DeFi, used as collateral. We're working on some fantastic programs with Aave and a few other places where we can hopefully one day we'll be able to use XBasket to use as a collateral to borrow against that some stable coins. Now, that would be amazing, right? So you have a collateral that grows at, let's say, 18% a year, and you're borrowing something against it that you pay 5% or 7% interest. So that'd be pretty cool. like a self-paying loan using that mechanic. But we're not there yet. But obviously, there will be some utility for X baskets on some decentralized platforms, some decentralized collateral platforms where you can borrow against it and things like that. So all that will come out as we're releasing the products on LandX.
Awesome. Yeah, very cool. Very cool. Everybody wants to know, expanded utility, and especially as it's interesting that you bring up being able to lend and borrow against it, because that's obviously something people want to be able to borrow and against assets that aren't just Bitcoin and ETH, right? So,
Well, it's volatile. I mean, you borrow against.
Yeah.
I mean, when it goes up, you borrow against Bitcoin, you feel great. But
Yeah.
I mean, I remember people borrowing against Bitcoin when markets was coming down, and they didn't sleep at night because they were liquidated left, right, and center.
Oh yeah.
So that was. So you want to have so when you think about a collateral in your sort of DeFi degen strategies, you want something that cannot physically
appreciates.
Yeah, well, at least that cannot drop a lot, right?
It's got to keep up with inflation at minimum.
Well, that's
right?
great
and
if
what
it can,
you put in.
But so long as that you kind of certain that it's not going to drop 50%, like you're okay, like you can strategize around it. But
Yeah.
I would strategize around Bitcoin, although it's a fantastic. I love Bitcoin, and like I'm almost like a bit ETH maxi myself, but like I'm a bit ETH X maxi, right? So I'll have Bitcoin, Ethereum, and X tokens in my wallet. That's for sure. That's it. Nothing else. Get rid of everything else. Bitcoin, Ethereum, and then X basket, X token, X soy, X wheat, X rice, X corn. Stakes, receiving yield. That's all I want.
Nice. Yeah, well, I'll throw out some shit coins there you can buy real quick, that I own, and we can pump that too. Just kidding. No, I'm just kidding. Yeah. But yeah, I mean, I don't see any issues there. Obviously, owning commodities, right, and owning assets that are going to appreciate and are never going to. I mean, yes, we could run out of food one day, right? But that's. Hopefully not. Then we're in
if that happens,
situation.
right? So if that happens, so then X basket will be like $1 gazillion.
Yeah.
Right, because it represents but that's not going to be the case, hopefully. So, but
we hope so.
Yeah, but like realistically, legal structures will only sustain life on this planet so long as that life is being fed. The moment we stop feeding people, what's that saying? So we're 9 meals away from anarchy, right?
Yeah.
So that's it. That's like everything that we have is just these 9 meals, and that's not looking good. So if you dig deeper, guys, if you like search food security, soil quality, like dig deeper into these things. FIO food price index. Have a look what's going on in that whole food security narrative story, and it's horrendous. Nobody's talking about it a lot, but it's worse than global warming, much worse. I'm not scaremongering now to sort of pump X tokens or LandX tokens, but it is unfortunate that that we're at the point where the population is close to 8 billion and growing to 11 billion people. There's no more farmland, and yields are not being able to be grown a lot. And the growth of yield is achieved through the chemical production and deteriorating food quality. So have a look at things like nutrient density. What are we eating? Why do we have health problems? That's all connected to food that we eat, and it's all connected to basically that stuff that grows on the fields. So LandX, one thing I want to say is that LandX is aware of all that, and we're not sort of pretending to be, a solution to every problem, but we are definitely want to genuinely contribute to the solution and be part of the solution to the problem. We understand that without capital inflows into ag industry, nothing will change. So that's the first thing. We provide rails for capital to flow there. Second, we put 5% of the revenues of the platform into LandX Choice. LandX Choice is a fund that will vote for initiatives to develop sustainable and eco-friendly farming practices, which I think are tremendously important. So these things will all be voted by the LandX holders on the protocol voting level. Once the protocol obviously develops, there's no funds at the moment in LandX Choice, but once the platform is live, immediately LandX Choice will start having some capital and we'll start allocating grants. We'll start supporting research in areas of sustainable farming. At least what we'll do, and that's our promise to the farming community, is that we will collate materials from our community members that we have a bunch of that we worked in the last 2 years about various sustainable farming practices, and that will be sort of part of our offering to the farmers when we offer them the finance to look at how else they can work on their land to uh, to make it more sustainable long term.
Yeah, very cool. Yeah. Just real quick, I want to get to some of the community questions real quick. I'm glad you covered LandX Choice, but has the irony crossed your mind that, like, you think back a few years ago, everyone's talking about Bitcoin uses so much energy, it's so bad for the environment, blah, 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 blah. And then here you are trying to push, like, in developing the environment and protecting the environment and increasing food supply through crypto. Is that irony kind of, Donnie? That's
Look,
just
I don't
makes me chuckle.
So I don't
To see the
really.
tables turned.
So I looked into this argument that Bitcoin is a net negative for the environment, and there is a case being made that it is, but there's also being case made that it optimizes and it acts as a dampener in the energy grids. Now, the energy supply and the energy grid is a very tricky thing because you use energy only during peak hours, but you need to provide it at levels where you need to provide for that peak hour supply. And then when you're not having that supply, you got to store that, which is expensive and wasteful. So I've heard and I read the case for Bitcoin mining to be using a lot of this extra unutilized production capacity. And there's no real easy solution behind it. But then if you're using the capacity all the time, during peak hours, the mining might be a bit less. During not peak hours, the mining increases. And then you negotiate your pricing for your kilowatts around that with energy producer, then you have a very good model where you're actually beneficial for the grid as a whole rather than just a consumer of this energy. So I think that there's a lot of that going on in the Bitcoin community that they're not doing a very good job explaining to people. So I think that there's this narrative of them being net negative and disastrous for the environment kind of cliche is almost being stuck to Bitcoin and they can't get rid of it. I don't think they're really doing a good sort of a good job with it. Uh, but yeah, I mean we're not consuming anything that is you know. I mean we partner with KlimaDAO. I mean so we're green guys, but like we're not ultra green.
Yeah.
Yeah.
Understand. All right, very cool. Yeah. All right, so let's. I know we only got a few minutes left here. Everybody, we'll do the live drawing for the $200 winners here just shortly. I just want to make sure I get a couple of these audience questions for you, if that's okay.
Go for it.
If you have some time. All right, so I saw this a little bit in the Discord and some in the comments. Could you elaborate on the specific mechanisms LandX employs to handle default situations, particularly in reclaiming assets through liens and NFT representations, ensuring investor protection and continuity?
Yeah, so we covered that at the first part when I kind of extensively talked about the crop share agreement and the mortgage agreement and then the promissory note forming these three pillars of that legal structure that we're using. So next question.
All right, perfect. Yeah, we did talk about that. My apologies.
No worries.
I think when I read that differently as far as the elaboration. Okay. All right. So you've already covered the pre-sale. You've already audit results are in the docs with QuantStamp, which is a great audit, by the way. I've read through the results and what you guys have done to rectify little things. Really good audit.
Thank you. We have to launch the bug bounty. as well on the Munify just before launch, just to make sure that we have a double protection of security of smart contracts and the whole mechanics. So had a couple of interesting submissions, not really executable in real life, but interesting. Made us think about it a little bit deeper. So the community is very live now in sort of DeFi space, looking after each other's interests. So that's cool. That's very good.
Okay, so one question on governance. I know you talked about things being voted on, but what is kind of your governance structure, and then decision-making process for the DAO? Is this similar to like Synthetics kind of situation where they have like a board overall, or how did you guys structure your governance?
Yeah, so at the moment it's quite centralized. So at the moment we have like a core team, and then we kind of execute the strategy that we've defined. It's a startup at the moment, but as we grow the TVL, we'll obviously corporatize, and we'll have a board, and then we'll kind of make it a little bit more structured in terms of our allocations, balances, and things like that. So at the moment, it's just going to be just a wasteful process, but I can see real value in it once we've grown a little bit.
Nice. Okay. And then Ozone asked a question. I'm kind of going to change it up just a tad bit, but how are people going to be able to see what land is owned by you guys if it's producing, right? Are they going to be able to, is there something that they can go to verify all the data for what they're buying into?
So there's a few things, right? So we're building it now. When you go to the X token, there is a section called information around X token. And that information aggregates the information around how many fields, how many hectares, and what's the productivity, and how much crop share obligations have been minted against all that yield as an aggregate. So there's going to be a link when you click on fields. It's going to take you to a page. I'm spilling alpha now. I'm not going to do it. So yeah, okay. So the short answer is yes. You'll
there
see.
Will be. Okay.
Like there'll be stuff. Okay. Let me do it. There'll be stuff that you will fly drones over the lands. Like we'll fly drones over the lands to make you see when a harvest is happening. It's fascinating to just know what's happening on those lands when they're being harvested. And so that's all going to be built out. So hire the guy on that tech. He's looking after making lists of various options. And I'm I'm very keen on that stuff. I'm a gadget guy, so I really like it. So that's going to be there for sure, 100%.
Nice, very cool. And then a good question from Arn, actually. I was thinking about this as you were talking about the originators. Is there a mechanism in place to control the originators, right? Like, obviously, they're out there working deals, right? But say they decide, hey, I'm going to take advantage of this less financial literate farmer, as Arn put it. Is there a mechanism in place outside of just typical contracts to keep them from taking advantage of people?
Yeah, absolutely. So the originator operates within the protocol parameters. So he cannot charge a one-off fee which is higher than 1% of the value of the loan, right? So if the loan is, let's say, $200,000, then he cannot charge more than $2,000 for originating of that loan. And there's likelihood that if it's a popular area where originator works, there's going to be two of them bidding for the same farmer. It's a very lucrative business, offering money to farmers. So if one offers 2,000 and another offers 1,000, then the market will find where that true value is. That's one mechanism. And the second mechanism is that the originator gets a fixed 1% of the value of the loan that he extends. So it doesn't really, like, he has no way how he can really take advantage of the farmer, because we will cap the maximum amount of loan that we'll give by the maximum allowable crop share, which equals to roughly 10% of his average harvest. So let's say he grows 6 tons of soybeans a year. Okay, it's a lot. Let's say 4 tons of soybeans a year he grows. We'll say you can tokenize 400 kilograms of soybeans. Okay, how do we know that? Well, we know that because every farmer in the region grows approximately the same amount of soybeans. And we don't care whether you're the best farmer or a middle farmer in there, right? So we know the average for the region for that, province is 6 tons of corn or 5 tons of wheat or 7 or 10 tons of rice or 4 tons of soybeans. We know these averages for the regions we work in. So we're going to establish these averages for everybody on the same level as the maximum amount of share of your crop that you can tokenize on the platform. Now you don't have to do the whole share. You can say, okay, I'll just, like, I don't need a lot. I just need to buy one tractor and I'm good. So I'll tokenize 100 kilograms of soybeans, which will be like maybe like 3% of your average harvest rather than 10%. That's okay for us. Like, we don't mind that. That's less risk for the protocol. But then the farmer can buy back. This is one thing I didn't say. So farmer can buy back his obligation at any time by buying X tokens off the market and then closing off his obligation. And then these X tokens are being burned. So that loan is flexible, long-term for farmer. It doesn't have to pay interest, which is floating, depending on the Fed, policy. He just pays a fixed amount of harvest that he grows. Very easy for him to understand.
Yeah.
So he carries. So basically, he's de-risking from forex risk because, let's say, he borrowed in Colombian pesos, and pesos just went up by 15% against US dollar. But he's growing soybeans, and soybeans on the global market, dropped by 5%. So he's carrying all that risk in a normal financing arrangement. But he carries none of that risk with LandX, because as he used to pay 400 kilograms of soy, he's still paying 400 kilograms of soy.
Yeah. Oh, okay. Awesome. Yeah, that makes sense. And then, are you guys looking at? I know you like. Are you guys looking at expanding it other crops based off locations as you get the wheat, soy, corn, and everything set up? Are you going to look at expanding depending on what the regions offer?
So we looked at that, and then that was the hardest decision that LandX made, probably. And we're looking at rapeseed and palm oil and whatnot, and coffee beans and cucumbers and tomatoes and weed. Like, we had a lot of things, and we said no. We said no to everything. That was the hardest decision for us to make, to be focused on four things: corn, rice, soy, and wheat. These are four staple crops. LandX version 1.0 will not go to any other crops. Anybody else can. Any other protocol can fork LandX and do the same. We're welcoming that and go into bananas and oranges and whatever, if they want to. We're great. We'll be supportive. In fact, we'll share knowledge and we'll share our network, of connections, because we believe that it's all connected. But we'll stick to soy, rice, corn, and wheat, and we want to dominate these four markets with financing. That's our goal. And that was the hardest thing for us to do, because there's so many opportunities. Honestly, we had blueberries offered. We had, I don't know, what not. What did we come across?
Yeah, it's definitely tough because there's so many different crops that can be offered by so many different regions. But I mean, you did pick the four staples, so it's like that's the smart smart strategic approach to take, I think.
Hard one, though. Hard one, because there's so many arguments to launch blueberry token, and then a tomato, and a coffee bean, and this and that. And,
yeah.
But no.
Yeah, I mean, it's fair. There are good arguments. I mean, you talk about rapeseed, right? That's in everything, right? So it's So
oh yeah.
All right. Well, sweet. Very cool. I really appreciate all the great, thorough responses. If you're down, let's go ahead and run this giveaway. So we can
yeah, I don't know how to do it.
How do we do it? I've got a Twitter picker set up. I put the tweet in.
Okay.
Let's go. So I'm going to run it right now, and it'll give me the two winners. All right, everybody, stand by. Drawing now.
Roll the dice.
All right, first winner is going to be at ShinSpade1. All right, let me make sure. I know he commented. Pretty sure he's in here too. Yep. All right, ShinSpade's present. And then the second one is Boo Boo Ooga. All right, yeah. Boo Boo, I see you in there as well. All right, ShinSpade, Boo Boo, send DeFi Raiders a DM. Just take a screenshot, prove it's you. All right, send us a DM, and then I'll coordinate with LandX to get you guys your rewards. So appreciate everybody tuning in. And thanks, LandX, for the awesome giveaway. Really generous of you, and really appreciate what you guys do for the audience outside of just the great product you're building.
Hey guys, thanks very much for for spending an hour with us, with me and with DeFi Raider and DeFi Raider. Welcome back, and let's keep in touch.
Absolutely.
We'll update you on the progress of what's happening anytime.
Absolutely. I look forward to getting you guys back on here and talking as you guys are building and seeing this thing grow. All right. Have a wonderful day. Thanks so much.
You too. Bye.
All right, everybody. Thanks so much for tuning in. Really appreciate your time and support. Couldn't do this without you. If you're hearing this now on YouTube for the first time, please hit that like and subscribe button. Once again, I'm Relentless from DeFi Raiders. We'll see you next time.